Now, SIS, the Security Services Company, reported numbers, and the earnings were good for the fourth quarter. Revenues and EBITDA saw good growth, although their margins contracted to below pre-COVID levels. Dhiraj Singh, Group Chief Operating Officer at SIS, is now joining in to take some questions. Thank you very much, Dhiraj, for joining us. Prashant this side. Could you, we're talking, I think, after a while, so could you talk to us a little bit about how the two main segments of your business are really doing at this point in time, and how are things looking for FY24 in both?
If we start with the overall PAT level, I think we've done phenomenally well. We've achieved 346 crores in the Q4, which translates to an annualized EPS of about 26 rupees per share, which in Q4 of FY22 was about 22 rupees. If you look at the growth, the India security business has grown 20% year on year, which is a phenomenal comeback. More importantly, the cash business and the facility management business have grown by more than 35% year on year basis. If you look at the Indian business, main business of security and facility management, the EBITDA, absolute EBITDA growth has been more than 28%. Even on the margin front, there's been improvement. Facility management was down in Q3 at about 4%. It's bounced back to 4.4%. And the security business continues to inch upward, even in the margin percentage, from 4.9 to 5%. But I'd like to point out on the cash, because that's our business is all about cash flow. And we've done very well on that front. In Q4, our OCF to EBITDA is about 145%, which was about 95% only in the previous corresponding Q4. We brought down our net debt the last time that our goal is to bring the net debt down. It was 2.1, the net debt to EBITDA ratio. We brought it down to about 1.75. And just this week, we repaid another 82, which brings it down to about
Mr. Singh, yeah, we do have those numbers. Actually, we're trying to get some, forward-looking statements. So just some indication of what the future could look like. In your facility management business, which is, I think, about 20% of your revenues, where you do housekeeping, cleaning, facility operations, etc., it's been pretty good. The growth has been strong, 35% plus revenue growth. Is that something that is sustainable over the next couple of quarters and in FY24?
Yes, for this current year, we expect the similar growth patterns to continue. But our focus will be on improving the EBITDA line far more than the top line also for facility management.
All right. And also on the debt, I think you were mentioning the reduction in debt. It's about 860 crores right now. How much do you think you can bring it down by further in FY24?
Well, it's less than 800 crores now. I was mentioning this week itself, we've repaid another 82 crores to National Australia Bank. So it's below 800 crores, and we are watching the situation. Every quarter, we intend to repay a little more.
So by the end of this year, Mr. Singh, what can the number look like from the sub 800 crores?
See, globally, as we've discussed in the past, we like to operate in the 1.5 to 2 debt ratio.
Okay.
So we'd like to keep it in that range. Probably a little below 1.5 is where it would be ideal.
Okay, let's look for a couple of more numbers. Then the revenue growth, what can you guide for the entity on the whole? And also margins, well, it's been between 4.5% to around 5%. What's the outlook on both these two?
On the margin front, our goal is to reach pre-COVID levels at the earliest for India business, which is in the 5.5% to 6%. Our projection for this year seems to be on track to achieve that within this year itself, and definitely in the Q4 of the current FY. On the growth side, we see no issues at all. Growth is very, very robust on both security as well as on the facility management side. I'd like to point out our cash business also, which has clocked the highest revenue this year of 540 crores. And that's operating at a 16% EBITDA margin also. So growth on all businesses is very, very intact. Our focus is on improving the EBITDA margin to pre-COVID level.
Okay, all the best for that, and thanks a lot for joining us on CNBC-TV18. That's SIS India, the management talking about the business and the way forward.